This is Fin Value Talks with Nirmal. Our guest today is a classic rags to riches story. He started off in a one-bedroom chawl in Mumbai and now manages over 4 lakh crores of investor money. He is the person that people turn to when they need clarity in chaos. Nilesh Shah, Managing Director, Kotak Mahindra AMC, will be joining in today to talk about his outlook on the markets, his projections, tariff fears, what investors should do with his money, his top bets, and his biggest regrets. Stay tuned. Nilesh, thank you so much for joining us today. I want to unpack so many things with you, but let me start with comments that were recently made by Mr. Uday Kotak. And he was talking about how the US, in a way, is now breaking its trust, and in the long run, it's going to be detrimental for India. What do you believe the US is doing when it comes to these tariff concerns? What does it mean for India?
So essentially, they are levying about 50% tariff. 25% is being levied because we import Russian oil.
Yes.
But the largest buyer of Russian oil, China, they don't want to touch.
Exactly.
More importantly, America continues to import fertilizer, chemical, uranium from Russia. And European Union also imports Russian gas. So this 25% tariff, as India mentioned, is unjust, unreasonable, and definitely not warranted.
Yeah. So where does that leave us? How should India play it? Do we take advantage of this situation and sort of try and optimize it? Should we be paranoid? Should we be worried?
Undoubtedly, there is a need to worry. At 50% tariff, many of our products will become uncompetitive.
Yeah.
Chemicals, auto components, textiles, aquaculture, you can't export at 50% higher tariff. We have to, as they say, when life throws lemon, make lemonade. We have to take advantage of this opportunity. India runs the second largest trade deficit in the world after United States of America. We are 1.4 billion people. We have allowed our markets to remain open without seeking reciprocity. Today, about 1.3 million Indian students go abroad for study. At $25,000, that's more than a reasonably large amount.
Yeah.
And yet we hear our students are not getting visa, they are not treated fairly. Well, when you combine your purchasing power, you can get samosa on Switzerland and the seller speaks in Hindi or Gujarati.
Yeah.
Why can't we leverage that for our other markets? So we must make access to our domestic market a point of negotiation to seek reciprocity. Second, we must accelerate our ease of doing business. Our entrepreneurs are world class, but the ecosystem constrains them, restricts them. How do I empower them so that they continue to go and win against the world? The third, we have to go and invest in R&D and innovation. We are Jugadu nation rather than innovative nation. We must invest for innovation.
Yeah.
If you can do these three things, seek reciprocity, invest in innovation, and empower our entrepreneur, I think this will become an opportunity for us.
Yeah, you really put that well. And you have gone on record to say as well that the next big emerging sector is not going to be one definitive sector, but the power of innovation and tech-led innovation. So can you elaborate on that? Where does India stand?
So today, how many of the basic, like artificial intelligence is the future? We don't have LLMs. Are there Indians who are contributing in developing of LLMs? Answer is yes.
Yeah.
We keep on losing talent. There is this Professor Arogya Swami Paulraj, born in Coimbatore, Indian Navy, worked for decades. He was setting up India's 3 labs in advanced computing and military intelligence and artificial intelligence. This was in the late 90s. In 5 years, he got frustrated and moved out. And he went and joined Stanford as a student, then eventually became a professor over there. And he invented MIMO technology, multiple input, multiple output. That formed the base of 4G, 5G, LTE technology. Now, if we keep on losing talent like this, then how will we progress? Today, the biggest risk for Indian economy is that we are dependent upon external factors, external innovations rather than internal innovation. The government has taken the right step of announcing 1 lakh crore R&D fund. I hope and pray that like ISRO with shoestring budget creates wonder,
Yeah.
we are able to do the same with this 1 lakh crore R&D.
Hopefully, with our jugadu attitude, we should be able to.
Uh, Jugadu in some sense is good,
Yeah.
but in some
Yeah.
sense it is bad.
Yeah.
We need to invest in fundamental
Yes.
research. Today we have achieved many things, but there are few things where we can further go higher.
Yeah.
And that's where we don't need jugadu mentality. We need proper brick by
Yes.
brick laying foundation and building on top of it.
Absolutely. Let's talk about the macro setup as well in India. The recent GDP numbers, the poor corporate earnings have led to FPI selling out quite massively. Where do our macros stand, and how do you believe the liquidity situation will shape up?
So FPI selling is purely function of the amount of profit they have made. They are not used to making money in emerging markets. India is an exception. They have made so much money that in their portfolio, India is standing out. By any fund manager, when something stands out, you tend to book profit over there. You look at the same mentality in domestic investors. At Kotak Mutual Fund, we had invested in many stocks which have become 100 baggers, but have we retained all of them? Answer is no. We kept on booking profit even though they kept on going up. So, like we do it over here, foreigners are doing it in India. From a macro point of view, we are one of the fastest growing major economy. Will continue to grow at 5, 6, 7% for years to come. We have built infrastructure, we have accelerated ease of doing investment, though there is a long way to cover. Some of the talent is also staying back in India. There's capital available. So this Triveni Sangam of capital, talent and infrastructure will keep growth between 5 to 7%. But we are not taking any steps to make it into double digit. The land reforms, well, government tried and failed. Labor reforms, we are doing something by stealth, but not on big scale. The farm reforms, government tried but failed, even though majority of farmers were in agreement for those reforms. Strategic divestment, well, we did complete Air India, but there are many more to do, and the speed is a challenge. Ease of doing business, well, we have done a lot, but there's a long distance to cover. Unless until we take tough decisions, unless until one generation of Indians take the pain of initiating those reforms, it's unlikely that we'll go into double digit growth. So we still will be good at 5, 6, 7%, one of the fastest, but we will still be playing below our potential.
Okay, baby steps, but lots more to go. And what about the markets? JP Morgan, for example, is saying 30,000 target in the next 6 to 9 months if it's a bullish case scenario. Where do you stand when it comes to equities?
So there are two things which move the market. One is earnings, second is the valuation. From a valuation point of view, we are already at nearly premium valuation. Our premium to other emerging market is one of the highest. So unlikely that valuation will get re-rated. My worry is actually the other way around. Will our valuation get de-rated? Our companies are making so much focus. Our companies are focused so much on making profit and return on equity that they haven't invested for future. The R&D budgets of Indian companies continue to remain fairly poor. And without investing for future in R&D and innovation, how are you going to sustain this valuation? So on the valuation side, I'm worried. I think many companies will get derated as they haven't invested enough for the future. On the profit growth side, I think FY26 is year of consolidation, high single digit earnings growth like the June 25 quarter. FY27, we will see double digit growth. But do remember that if your nominal GDP growth is likely to be between 8 to 12%, corporate earnings growth is unlikely to go much higher than that. So we are in a scenario where returns will have to be moderated and focus will have to be on valuation. You'll have to get out of those companies where earnings may grow, but valuation could get derated.
Which are the sectors that are most vulnerable to this, according to you?
So, in the short term, chemicals, aquaculture, auto components which are exporting to US, textiles which are exporting to US because of this tariff is vulnerable. Some of the sectors where valuations are out of sync with reality,
Which?
they are more bottom up stories rather than sector specific.
Okay, fair.
But anything where valuations are excessively high, way above historical averages, one needs to be very, very careful.
Would you say like pharma, FMCG to a certain extent?
FMCG, yes. We have seen many of the FMCG companies not delivering great return. And that's because they were making products which were suitable for my grandfather generation and father generation. They haven't made any product which my daughters are using. Unless you innovate for the next generation, how are you going to sustain this valuation?
So wouldn't even IT be vulnerable to this? One of the longest losing streaks. Some of the mid cap companies have been doing as well as the large caps. Are they at the brink of now a gloomy future?
So it's a tough call because it's not that IT companies are not seeing the future or not writing what is written on the or not seeing what is written on the wall. It's just that they are services company. Now, if you are using Microsoft product, you can't make another window. If you are using SAP product, you can't compete with them. Their services nature is ensuring that they cannot go and invest for product creation. Many of Indian IT companies have created product, but their primary business is services. The way they could have done was probably what their promoters have done. They all invested into startups and supported. Many of them were their own employees. So, yes, while you cannot go and invest directly into product creation, you should consider investing in startups which can create products, and with your support and money and guidance, maybe the chances of success also increases. Overall, the IT companies are in a tough spot. They have to leverage AI to ensure that they remain relevant. And while they are doing it, they also have to ensure that their existing employees continue to get reskilled, retrained, redeployed, and they don't carry more baggage than necessary. So IT sector, I think now has become bottom up sector. There are companies which are reinventing themselves.
Yeah.
There are companies which are becoming like dinosaur. The tail is on fire, but the head has not yet recognized it.
Okay. Speaking of startups, I know that there was, at one point you were looking at Zomato, and then I believe you thought it was loss making, wouldn't do well, and then you had a rethink, and it was the other way when it came to Paytm. Tell us about some of these experiences and what you've learned now.
So one, I'm a old fund manager, and
You don't
the-
look it.
thank you. But frankly speaking, I'm wired to
Yeah,
evaluate
yeah.
companies in a different manner. So when Zomato came, I told my team it's looking expensive, and they said, no, sir, it is a very, very good company and we should invest. And gladly, they didn't listen to me. When Paytm came, I was impressed with them and I said, we should be an anchor investor. And my team had a different view, and we passed that issue. So clearly, I realized that I need to reskill myself. I'm not competent enough to evaluate this new age company, and which is where I reached out to few people who were kind enough to teach me. And couple of interesting point in new age economy. You have to bet upon the winner because winner takes everything. If you look at job and skill related work, top two or three companies make all the profit. Rest all are just loss making. So you have to get the winner. And to be a winner, you need access to capital. Either you have it or you have sponsors who will provide it. And third and the final thing is the path to profitability.
Yeah.
Even it is distant, you need to have a path to profitability. How will you monetize your existing customer base? So between that path to profitability, access to capital, and
Yeah.
the winner mentality, that will create the new age economy investment.
Absolutely. And what about the three C's: cement, chemicals, as well as consumer discretionary? Are those top favor?
So cement, undoubtedly, yes, there is a fair amount of price discipline today. Government is spending money on infrastructure, and I believe home improvement cycle should pick up as eighth pay commission comes into play. Real estate sector is bit subdued because of the price rise, but the home improvement should compensate for that. So cement, we continue to remain bullish. It's a commodity on which tariffs cannot be levied. It's entirely domestic, so that's one more advantage. On chemicals, clearly companies which are exporting to US will be in trouble. At 50% tariff, they won't be able to supply to US. They need to find out other opportunities. In terms of consumer discretionary, we remain fairly bullish. The government has provided about 1 lakh crore of tax rebate annually from this year onwards. EMI burden will come down by about 1%, and that leaves about 1,20,000 to 1,50,000 crore in the pockets of consumers. There could be potentially GST rate rationalization or petrol diesel price cut towards Bihar election. And finally, there will be eighth pay commission coming into play. So there is enough money in the pockets of consumers, and that should come into play over a period of time.
Okay.
So I believe consumer discretionary, which can range from hotel, tourism, travel, education, airline, home improvement, etc., should do well as consumers go out and spend.
Okay. So good to get in your take on top sectors. But when it comes to the markets, your emotional quotient is as important as your
Yes.
intelligence quotient. Have you ever had an experience, or would you like to share anything where maybe your emotions took over more? And have there been any regrets or any advice to people on how important the emotional quotient is?
So undoubtedly, market is as much about fundamentals as it is about human psychology. And we are all human beings. We will get swayed by greed and fear.
Yeah.
We will get swayed by our emotions. The best thing is to be aware about it. Suniye sabki, kariye apni. But at least you should have ears open to listen to everyone.
Yeah. You came from very humble beginnings, and there's so many people today, with a middle class background. They're juggling monthly expenses, education, and so many other, rising costs. What is the most realistic and effective way that they can build their wealth?
So essentially, the way to come out of poor or middle income background is to become an entrepreneur. Now, how many of us can become entrepreneur? Very few. Why not then partner with India's best entrepreneurs? If I go with money to Bombay House and say I want to partner Tatas, they are not going to entertain me. But when I buy one share of Tata Steel or Tata Motors or TCS or Tata Chemicals, I become partner of Tata. Show me any other way in which I can partner with India's best talent, except stock market. That's your passport to success. If you deal with the best entrepreneurs of India, you are bound to make money.
I love how you've put that. I mean, that's a great pitch. So, is SIP the way to go? SWP, what is it that you're advising?
So essentially, we have been popularizing SIP because it is simple to understand. But in reality, it is asset allocation.
Yeah.
You have to maintain your allocation between debt, equity, real estate, and commodity. Now, some people can do on their own, some people will need advice from distributors, or some people can entrust that responsibility to fund manager through multi-asset allocation fund. Now, obviously, in savings and investment, four rules are very simple and worth applying. Income minus savings equal to expenses is far better than income minus expenses equal to savings. So please save something. बूंद बूंद से सागर बनता है. So do regular investment.
Yeah.
जल्दी का काम शैतान का. So invest for long term. and don't put all eggs in one basket, which means you have to do asset allocation. Between these four principles, your financial security is guaranteed.
Okay, wonderful. So that's the way to go if you want to really build your wealth. And you love throwing in cricket analogies, and you've spoken about the ability of a company to be nimble, be able to play the test matches as well as the T20 format. So which of the companies, if you'd like to share, or types of businesses do you think have stood the test of time but have still been ahead of the curve?
So there are many companies which have kept on reinventing itself. You have to kill your own success to be successful.
I love.
And that's where we really appreciate the management which is able to reinvent itself. There are FMCG companies, there are consumer discretionary.
Would you like to share any names?
So we don't talk about company specific, but effectively see the company through this parlance. They were serving your father generation, they were serving you, and they are ready to serve your next generation. If you meet a company like that, that's good enough.
Absolutely. And now look where you are, and all of your lessons along the way. You're the voice that people listen to when they want clarity and chaos. So thank you, Nilesh, for taking time.
Thank you, Owen. It's my pleasure.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.